Gold is melting down. In today's show, we're going to talk about the charts, the technical levels that we need to know now, the patterns that are developing in gold. We're going to talk about the factors that are influencing the gold price, short-term and long-term, and we're going to talk about strategy. We're going to talk about the advantage that we as retail investors have over the big institutional money and how we can use this advantage to position ourselves for big gains in the gold market. Important show today. Let's go. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Happy Wine Wednesday, everybody. Yeah, that's a thing if you like wine. My name is Daniel Helmy. Welcome to Hot Trades of the Day. If you're new to the channel, hit the subscribe button so you don't miss any of these videos. Because if you had seen previous videos of gold, then you know I predicted this pattern and what we are seeing in the gold price. We talked about it here in this area. I told you we're doinking off the 50. That's not good. If we break the uptrend, we're going to sell off. That's what's happening right now. This looks very reminiscent of this pattern right here. And we got a waterfall sell-off. Well, that's not pleasant if you're a gold bull. Or is it? Look, nothing goes up in a straight line bottom left to upper right. I wish it was that way. It is not. So when we get corrections like we do now, and I know it's been a rough time, my call for the intermediate correction at the end of January when we hit 5,600 right here was correct. We're now in it for 3 months, so that's intermediate. And yeah, it's been tough. You know, 2 monster sell-offs has beaten down the sentiment of the gold market. And that's one of the reasons why we see the weakness. Again, I talked about it in yesterday's silver video. If you didn't watch the video, if you missed it, hit the subscribe button. I talked about it there. Trend following right now, not in the favor of silver or gold, rather to the downside. So we probably have some shorts, institutional short positions in gold and silver right now. I would personally not short gold, way too risky, or silver, but you know, that's what the hedge funds do. For us, it's more important to see what is really going on and what are the targets as far as the levels in the charts that we need to pay attention to, and what are the factors that are going on so we can put it all together. Now, let's start with the long-term outlook. Look, this is the chart since 2024. We had a monster rally, and now we get a correction. This is a bull flag. This is not a top, this is a bull flag. We saw it here. This lasted about 5 months, right? We saw a smaller one here that didn't last as long. Now we're in the 3rd month. But look what we're also seeing. We're seeing that we're running into the top of a triangle formation of this downtrend and the long-term uptrend. So by August at the latest, we'll get a resolution one direction or the other. I believe this is going to be resolved to the upside. There's also an interesting phenomenon that not a lot of people are talking about yet. As a matter of fact, I haven't seen anybody talk about yet. And that is that we might get a signal even before the triangle formation, the flag formation hits. And that is, look at this. The 50-day is moving down now, but the 200-day is moving up. So at some point in probably May, June, these two trend lines going to get very close to each other. And by the break of the trend line, we're going to get the first signal which direction the market's going to go. So we can actually move ahead and be faster than the majority of the market by using these trend lines. Now, Why does gold have no strength? The first reason is geopolitical situation has kind of stabilized on a really low level. Trump doesn't really know what to do with Iran, so there's kind of a stalemate there. The Russian-Ukrainian war is basically has taken a backseat. So the geopolitical risk factor right now, not in the mind of the investors. It's there, right? It's there, but it's not in the mind of the investors. Therefore, that doesn't help the gold price. The second factor is the dollar. Uh-oh, this doesn't look good. Look at this. The dollar is bouncing off the 200 and it's trying to break the uptrend for the third day in a row. If you watch this channel, we talked about the dollar last week. I told you, hey, something is happening in the dollar. Watch out for the dollar. We get over 99 and hold, we're going to see a big time rally in the dollar. And this is, in my opinion, what the gold price is anticipating right now. Plus, oil breaking out over this crucial resistance zone. In Monday's video, I told you, watch the energy sector. Get in the energy sector. This is starting to look good. Oil is starting to break out. This is exactly what's going to happen. It's going to establish itself over this yellow resistance zone. We're going to 120 again. And then you're going to hear it all over CNBC. So, there's another factor for the oil stocks that we need to keep in the back of our minds. Earnings season is coming. ConocoPhillips reports earnings tomorrow. Exxon and Chevron on Friday. Devon and a bunch of Canadians next week. So there's going to be news. And remember that for the first quarter, the whole last month of the quarter, the March quarter, oil was already over $90 a barrel. So there could be positive surprises, but what's really important is the outlook that these companies going to give. That could really move the oil stocks. So again, if you didn't watch Monday's video, the solution to all of your problems is the subscribe button. Now, back to gold, and let's talk about where will we go. My targets is still the same that I've given out here on previous videos. It's the 200 plus this Fibonacci retracement and this support zone right here. So we're talking 4,400 to 4,300. I can see us undercutting because the smart money is going to try to push out the panicky retail investors. So I can see us undercut, hit the long-term uptrend, maybe even undercut the uptrend. The interesting part is that, let me show you this real quick. This low is what we really need to pay attention to. But it's below the uptrend by now. So they can undercut the uptrend short-term to trigger the stops, and we can still make a higher low. This is going to be really interesting. So, what are we doing now? Now we're talking strategy. And now this is a really important point that I would like to make. We as retail investors have some real advantages over institutional money. The problem is that most retail investors don't take advantage of them. For example, one of the advantages that we have is we can invest in small companies. We can invest in illiquid companies that institutional money cannot invest in. They need bigger market caps, more volume. But the most important advantage that we have is time. Retail investors do not appreciate the time advantage that we have over institutional money. And the reason is they're not familiar with Wall Street. They don't understand Wall Street. So Wall Street thinks in quarterly terms, because the hedge funds, not so much, but the regular funds and institutional investments and the family offices and the money managers, they have to send out their quarterly reports to their clients how they're doing. So they're thinking very short term. They're thinking about their bonuses that they're going to get if they outperform the market by year's end. So nothing is really thought of in a longer time frame than 12 months. Mostly 3 months. That means we have a significant advantage if we are long-term investors. We can use short-term decoupling of the fundamental long-term facts to buy an asset on the cheap if the long-term perspective, outlook, and factors are clearly in the asset's favor. And this is what we're seeing with gold right now. The gold price is going lower because the dollar is going higher. Because the oil price is going higher, which will lead to higher inflation, which long-term and mid to long-term is good for gold, but short-term not, because it'll likely mean that we're going to get less interest rate cuts. But long-term, higher inflation is positive for gold. So therefore, a short-term weakness is an opportunity for us to beat the institutional money, because we can buy this weakness and then wait it out. And that's what we should do. You know, maybe we should just sit in a jacuzzi, sip a cocktail, close our eyes, think of the person we love, or I don't know, sushi or shrimp, whatever makes you smile, and wait for the prices to come to us. We know now where our target zones are. This is not a market, and we've seen the volatility in the gold price as well, where you go all in with one purchase. This is a market where if you're interested in entering the gold market, and I'm not your financial advisor, I'm not telling you what to do, I'm just telling you what I do. I would like to sit in a jacuzzi right now, but instead I'm wearing a tie and a vest and I'm talking to you. Sometimes you can't have everything in life. You want to add in increments. Maybe 50-50, maybe 30-30-30, where you deploy your money 30% if we hit 4-4, 30% if we hit the 200, maybe that's the same. Then you go 50%, 30% if we hit the uptrend or undercut it. You probably will have to put in limit orders, because as we have seen with silver in yesterday's video, and we see here right now, looking at the gold charts, you see high intraday volatility. And then you also want to have some money in reserve in case something completely unexpected happens. A big problem that really F's up investors is they don't have cash in reserve, and therefore they cannot act when the real great opportunities arise. So that is it for the gold market. Short-term outlook, we're going to go lower. And that's okay, because that is our buying opportunity. Because long-term, we're going higher. And I believe it's going to be much, much higher. That's it for today. Enjoy your jacuzzi. Talk to you tomorrow. Bye-bye.